Welcome to Value Gene Insight Conversations. Today we're doing a deep dive into the structural shifts that are, well, completely transforming the U.S. fruit market. We're drawing from a really comprehensive analysis that looks back over the last 2 decades and gives us projections all the way out to 2035.
And this is so crucial because the market isn't just fluctuating, it's fundamentally changing its shape.
Right.
We're seeing this decisive move toward a structure that is much more fresh-oriented and critically very reliant on imports. For anyone in food manufacturing or distribution, this isn't just a cost issue, it demands a real strategic pivot.
So our mission today is really to unpack the drivers behind this. We need to understand the consumer behavior shifts on one side,
The push, yeah.
and then the supply chain realignment on the other. Because if you don't grasp the implications of these forces, long-term competitiveness is frankly going to be at risk.
That's the perfect way to frame it. I mean, let's just start with the headline metrics because they really demand attention. Since the year 2000, the total U.S. fruit supply has actually declined by a staggering 19 billion pounds.
Wow.
But here's the bigger story. The import share of what's available has skyrocketed. It's gone from 34% all the way up to 57% by 2023. These are not, cyclical wobbles. These are permanent structural shifts. So let's look at the consumer side first and then how the supply chain is trying to keep up.
Okay, let's start with demand. So total per capita fruit availability, it fell about 20% since 2000, but it's mostly stabilized over the last decade or so. It's hovering around 237 pounds per person.
Right, but that stabilization, it completely masks the real story, which is the dramatic transformation in format. It's all about how consumers are choosing to eat their fruit.
It's that battle between fresh and processed.
Exactly. It's a zero-sum game. Fresh fruit is consistently expanding its share of the pie, while those traditional processed categories, they're shrinking. And fast. That dynamic is what's reshaping processor portfolios right now.
We have to talk about juice. The numbers are they're startling. If you're a manufacturer relying on that category, you're competing in a segment that has basically evaporated.
That is the core insight. Juice consumption is the absolute central driver here. It's fallen by a sharp 43% between 2000 and 2023.
43%.
And even with that massive drop, juice still accounts for 73% of all processed consumption. So the decline in this one single category is just overwhelmingly impactful.
And it's not just juice, right? It's happening elsewhere.
No, it's not isolated at all. Canned fruit consumption is down 32%. Dried fruit is down 18% over the same period. The market is shouting that consumers are pivoting away from these formats.
The ones that often carry high sugar or involve heavy processing.
But there is a crucial exception here, and it kind of offers a playbook for innovation. Frozen fruit.
Right. That's the one bright spot.
It's the only one. Consumption actually increased by 19% since 2000. It's the only processed subsegment with any kind of sustained growth, and that tells us a lot.
It really does provide a blueprint, doesn't it?
Yeah.
I mean, the difference between a 43% collapse and 19% growth tells you consumers aren't rejecting all convenience.
No.
They're rejecting the old school sugary convenience of juice. They're moving toward whole fruit or forms they see as cleaner, like frozen berries for a smoothie.
Exactly. The two forces are, one, evolving health perceptions, that flight from sugar, and two, just better logistics. We have much better year-round availability of fresh fruit now because of these diversified import chains.
It makes sense. If fresh is always an option, why would you buy canned?
And if you look at the categories that are gaining momentum, they all align with these modern wellness trends. Berries are the ultimate success story. Total consumption has roughly doubled since 2000.
Doubled.
Yep. They have that strong association with antioxidants, immunity support. They fit perfectly into things like breakfast bowls and smoothies.
And we're seeing similar strength in avocados, right?
Yeah.
That reputation for healthy fats and how easily they fit into salads, bowls.
And that expansion is happening almost entirely through fresh formats. It's not processed avocado products driving that.
There is also consistent growth in some citrus varieties. Lemons, limes, and tangerines are doing well.
And that's a really subtle but important detail because they're showing growth in both fresh and processed forms.
That distinction is key. Tangerines are winning because of the format, right? They're easy to peel, they're seedless. It positions them as a super convenient fresh snack.
And the contrast there is just, well, it's stark. Look at oranges and grapefruits. They used to be the kings of the juice aisle. Now, total consumption for them has fallen by nearly half.
In both fresh and processed.
Both. It reflects that reduced juice habit, but also, and this is key, the compounding issue of constrained domestic supply, which I think we need to get into.
Yeah, so the consumer mandate is clear, fresh, available, wellness aligned. But can the supply chain actually deliver on that? Let's look at the operational reality, because the answer is increasingly no, not domestically.
That's the pivot point. We've established that the U.S. has gone from domestic dominance to being heavily import-reliant 57% in 2023.
Okay.
And when you look at where that loss is concentrated, the picture for processors becomes incredibly challenging. Local processed fruit shrinkage accounts for about 95% of the total contraction in our domestic fruit supply.
95%. That is a staggering number. So you're saying almost all the pain in domestic supply is being felt by processors, not fresh distributors.
That's right. It's pure commercial logic, really. And it's made worse by operational constraints. Growers have a much stronger incentive to sell to the higher margin fresh market.
Of course.
And at the same time, you have lower labor and input costs abroad, which makes foreign processing just much more competitive. That's why the import share of processed fruit has jumped from 30% in 2000 to 59% in 2023.
Let's drill down on processed oranges, because this is where that domestic collapse seems the most severe.
Immense is the word. The Florida citrus-bearing acreage is down about 60%. Yields are down almost 80%.
80%. Why?
It's due to persistent citrus greening disease and just extreme weather volatility. This has decimated the availability of fruit that's suitable for juice. In fact, the domestic decline in processed oranges alone represents about 70% of the total domestic processed fruit decline since 2000.
So 70% of the entire domestic contraction is from one fruit-facing disease and weather issues. What does that mean for sourcing risk?
It means we've essentially outsourced our resilience. Brazil has doubled its orange juice export volume to the U.S. and is now the dominant global supplier. We've gone from having domestic options to being overwhelmingly reliant on a single foreign source.
And we're seeing similar, though maybe less severe, dynamics with apples for processing.
We are. Domestic supply there has decreased by £1 billion. And the economic reality for growers is brutally simple. Fresh apple prices are more than 3 times higher per unit than apples sold to processors.
So they have no choice.
They're compelled to allocate to fresh channels, which forces U.S. processors to rely more on cheaper imported inputs, mainly from China.
Now, if we switch back to the fresh market, the import growth there has been led by categories where the U.S. just can't compete at scale, right? Things like climate or cost.
Right. Over half of the £18.6 billion increase in fresh imports comes from things like avocados, pineapples, limes, tropical fruits.
The avocado case study here is the perfect illustration of this shift. Its import share went from 26% to 92% in less than 25 years.
Absolutely. The sourcing is now almost entirely reliant on Mexico. They have the ideal climates, huge economies of scale, consistent yields. It just overcomes U.S. constraints, especially high costs, and the severe water scarcity issues we see in, say, California.
But it is important to acknowledge that there's a domestic defense strategy here. Domestic fresh supply has remained fairly stable, right? Around 21 billion pounds.
It has. Domestic growers are surviving by being very strategic. They have pivoted decisively toward high-return categories.
Like berries.
Specifically strawberries and cultivated blueberries. They're leveraging biological advantages, high yields, and critically, their proximity to high-value markets. It reduces the cold chain complexity and lets them command a premium. That's where domestic investment needs to be targeted.
And that geography brings us to concentration risk. Our fruit sources are highly concentrated now. Mexico represents over 30% of fresh fruit imports. After that, it's Guatemala and Costa Rica. Brazil dominates juice.
And that signals a huge geographic and political vulnerability. A single weather event in a key Mexican growing region or a geopolitical issue with Brazil. It has magnified implications for U.S. inventory and pricing. It introduces a level of risk that just didn't exist 20 years ago.
So let's look forward. Let's talk about the long-term outlook through 2035 and what the strategic mandates are for navigating these shifts.
On the demand side, we project total consumption will stay stable, around that 237 pounds per person. But that structural split, it gets even wider. Fresh consumption is projected to increase by another 8%, while processed is projected to decline by another 15%. These trends demand totally different operational models.
And the supply projections, they just reinforce that need for global sourcing. Domestic production is projected to fall even further, down to about 29.5 billion pounds by 2035.
Which means the import share of our total supply is projected to rise from 57% today to a defining 65% by 2035.
65%. That number has to inform every single capital expenditure decision for the next decade.
It has to. And it defines the operational mandate for processors. The challenge for them is multi-layered. You've got continued contraction of demand combined with a shrinking, more expensive domestic supply, We project domestic processed production will fall to just 9.9 billion pounds by 2035.
And you have to put the domestic cost structure on top of that. I mean,
Yeah.
U.S. manufacturing costs, labor, energy, logistics, packaging, they've surged by roughly 33% in the last 10 years.
Which just weakens the cost position of U.S. operations against foreign competitors. So the mandate for processors is, well, it's crystal clear. They have to reassess their entire operating model,
Which means portfolio rationalization.
a significant one. Shifting away from those low-return, high-volume, import-exposed segments like commodity juice. The strategic pivot has to be toward higher-value, specialized, or functional formats that can actually maintain margins.
Things like premium frozen, specialized ingredients, functional fruit powders.
Exactly. Now, for distributors, the challenge is different. It's about managing complexity and elevated risk. They have to handle larger, more complex cold chain networks because of all this fresh volume moving internationally.
Which means more exposure to logistics disruptions, higher transport costs, and spoilage risk.
Yes, but the good news is that risk comes with a pretty significant commercial opportunity. Fresh distribution typically carries much higher margins than packaged goods.
So an investment in fresh capacity is really an investment in margin growth.
That's the way to look at it. So the mandate for distributors is proactive, it's capital intensive, they have to broaden their sourcing networks, deepen partnerships in Mexico, Guatemala, Costa Rica, and crucially, scale up their fresh handling capacity. We're talking cold storage and cold chain tech to capitalize on that growth in avocados, berries, and convenient citrus.
So when we put it all together, we're looking at a future market where success hinges on three pillars.
I think so. First, strengthening supply resilience to mitigate all these risks. Second, actively adjusting sourcing models to manage global volatility. And third, ensuring strategic alignment with that durable consumer trend toward fresh. This transition means imports will cover all the incremental demand, rising to an estimated 54 billion pounds by 2035.
And that fundamental shift brings us to our final thought for you to consider.
Given that the industry will rely on global suppliers for basically 2/3 of its fruit supply, what is the optimal strategy for hedging against the combined risks of geopolitical instability and climate volatility in these very key, very concentrated sourcing regions like Latin America?
Thank you for listening to Value Gene Insight Conversations. To deep dive, please see the show notes. For more on food industry topics, visit valuegeneconsulting.com or subscribe wherever you get your podcasts. If today's discussion resonated with you, please do not hesitate to reach out to us to continue this dialogue.